Why do we have so many stocks? Like when our flexi cap portfolio came out, 120, 140 stocks, and that's a range that we had always asked. And we were doing exactly what we had said. But why do we have so many stocks? And the second question that emanates from that is that then the weight to your top holding is very small. How do we address that?
Yes, Kumal, so I think, like you rightly said, we have a lot of stocks because that is our objective. The more number of stocks our portfolio has, it gives me as an investor comfort that the systematic process is working.
True.
Now, the idea of a systematic portfolio, like we've been talking, is to capture small alpha across a large number of stocks.
Yeah.
So one, we need to have a view on a lot of stocks. So when you think about us, we start at 1,000 stocks, then come to 750 stocks, and then finally create a portfolio of 120 to 140 stocks, like you mentioned. Yeah. The second point is that when you think about how the strategy works, goes back to what I was saying earlier. If we want to capture small alpha across a large number of stocks, we will be a benchmark aware strategy. We will deviate from the benchmark in very small percentages, which is where when you look at what are few matrices such as, what is our active weight on a particular stock, that's how much are we deviating from the benchmark, it's going to be very controlled.
Yeah.
So I think the point that we have a lot of stocks, the point that in each particular security we are not deviating too much, helps us capture that small, it helps us deliver what we are saying, that is capture small alpha across a large number of stocks, and don't build a portfolio which is dependent on a particular stock, sector, factor by putting a lot of risk or a lot of deviation in that particular security.
Super interesting. And since you mentioned these two matrices, that the active risk that we are going to take and how much are we going to deviate from the benchmarks, should we even give a guidance in absolute numbers that how we are looking at these matrices?
Sure, Komal. So I think when you see our fact sheet, right, and I think we have 3 months of portfolio notes out, very simple calculations. You can see that at a stock level, we do have caps. So we do not deviate more than a particular percentage at an individual security level, at individual sector level, based on what the strategy is. Secondly, when you look at the active risk of the portfolio, we are trying to run the portfolio at a risk of between 2 to 4%.
That's right.
And when you look at the active share of the portfolio, we are running that somewhere between 50-55%. And that's good, right? Showing that we have an active share of these numbers shows that we have an active view on a large number of stocks.
True.
And we're trying to capture those small alphas by these deviations.
Great.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.